Hi everyone, welcome to another weekly Forex forecast on FX Class. Hi there, my name is Halen, your financial analyst and the Forex mentor. In this weekly Forex forecast, which is for the 27th of April to 1st of May 2020, I'm going to be walking you through a list of currency pairs I have on my watch list, should in case of any breakout of trade opportunity. And in the first currency I have on my watch list this week is the USD against the Canadian dollar. I have the euro against the USD. I have the euro against the Japanese yen. I have the British pound sterling against the Australian dollar. And then we're going to wrap up things with the gold. Before we dive into this weekly Forex forecast, do not forget to click on the subscribe button. Also, click on the notification bell so whenever we post educational content of this kind, you're gonna be notified. Also, remember, Forex is an high-risk investment, also an high-reward investment. So, you shouldn't trade more than the amount of money you cannot afford to lose, and then do not trade with a borrowed money. So, let's dive into the weekly Forex forecast right now. First currency on our watch list this week is the euro against the USD. We can see the euro USD, didn't move much all last week, even though we have price rejecting, retesting back our potential key level support right here. This was it, rejection right here, support right here. You can see rejection, and then we have price close below this key level structure last week, and then we have another rejection. That was a pullback up for an upward or rally right here. So last week Friday, the bears failed to ensure a daily close below this key level, which had been active in right from February of 2020. Before I move on the analysis on the euro on the daily and the lower time frame, there's something I want to show you guys on the weekly chart. So navigating on the weekly chart right now, I'm gonna zoom in so you guys can figure out what I can see. And you can see right here I have a potential symmetrical triangle. This is the dynamic support extension right from December of year 2000, and then we have another retest of our dynamics this zone right here whereby we constructed our trend line, and then we have another rejection retest right here this present year. So due to this, from the high swings right here, we have it right here, we have rejection right here, rejection right here, and the rejection right here whereby we have our apex at this structure right here. According to formation of a symmetric triangle, it means price can either break to the upside or to the downside. So which means right now the euro USD is under a probability that price can still make a rotation from this swing right here to make a retest of this zone right here. So let's view on our daily time frame. I'm gonna zoom in. Okay, here is it. We had a pullback last week, and then on the 4-hour chart, I already know 4-hour chart. Here is it. We can see after price made a rally up right here, retest of the key level resistance right there, we have a rally right down here, and then we have price makes or swings right here whereby we have a rising narrow wedge right here before we have price breaking down, and then price broke this our dynamic support trend line. We had a retest, and then price went down. That was last week Friday. So what is the trading Nigeria behind the euro USD? For the fact we have the bulls ensured a daily close of price last week Friday, it signifies a bullish aggressiveness right here, the bullish activeness right here. So what I'm looking out for on Monday is to see if we can have a defined well price action to give us a signal of a bullish rally upward. So it all depends on where the Monday candle opens up. If the bulls failed to defend this zone on Monday, thereby having a pull up, and then the bears eventually make a daily close of candle next week, or if the next week candle have a open gap below and then close maybe at this zone next week, then it's a signal of indication that the euro USD is gradually willing to pull down in order to break out of this multi-year swings key level right here. See, this was the last swings low. That means the bull bears are willing to pull out price. And take note, the next key level support acts at 1.04567. This structure right here, you can figure out right here. So this is the next key level structural support I'm watching out for on this currency pairs next week. The best trading idea right here is to take this trade on the weekly time frame. Let's figure out if the bears can definitely ensure a weekly close out of this zone right here. That I think that would be the nice time for us, the best time for us to look for a bearish opportunity of trend right here on the Euro USD. Next on our list is the USD against the Canadian dollar. This was the peak of this currency pair. That was a key level of 1.46589 before we have a massive rally downward. Since then we had a choppy market. So after that, I already discussed this with the VIP members. I said I can figure out potential a bearish channel right here. This was the bearish channel. Actually, we can figure this out properly on the 4-hour chart frame. I discussed this in the last week weekly forex forecast. If you view the video, and then this was the bearish channel which was being formed. That was last week. You can see the swings high, swings low right here. Then we have a breakout. We took a trade right there. I discussed about this trade decision last week. And then this last spent week we had another potential of another bullish channel going up. We can see the two touches right here, and then we have this swings low right here, and then we have a rejection right here whereby we constructed our bullish channel. So last week we had price having a close above this potential key level support at this zone. You can see it was a resistance for the trend right here and a support for this market when it was in a bearish channel right here. So for the fact we have a bullish close above this our potential support key level, which lies at 1.40660, it's a strong indication of a bullish influence right there. And for the fact we have another bullish rising channel again, which is supporting our analysis right here. In fact, this is a confluence zone whereby we have a confluence factor right here, price closing above our key level support, and then we have price rejection at our dynamic support right here, and then price closing above this key level structure right here. So on the daily chart, here is it. So price carved an inside bar. That was last week of Friday close of candle. This is the mother bar right here, and this is the baby bar right here. So this is our indication that the bullish are currently active right here. Well, next week opening of candle have to give us another confirmation. If we have a candle opening below right here and then have a daily close below this swings low of this inside bar right here, it's an indication of bearish interest. And then alternatively, if we have the bulls ensure price maybe have a rejection right there and then successfully have a daily close of candle above this key level there, it's another strong signal that the bulls are definitely in to make a rotation of price to retest this previous swings high right here, and then if the bulls successfully break this region, then it's an indication then price is willing to move up to retest this next key level structure. I already discussed this in the VR with the VIP members already, our expectation on this analysis right here. So next week I'm watching the USD to see if I can have an opportunity where to get in right here. I want to see a pullback of price before I get in right here. And the next on our watch list is the euro against the Japanese yen, and this is the daily time frame. Wow, which seems not to be a well-defined price action chart pattern right here on the daily chart of the euro yen. But there's something I want to show you guys on the weekly chart. I already discussed this in the last weekly forex forecast, what I can figure out on the weekly chart, and I said I'm gonna monitor this currency pairs. I even stated with the VIP members and there's some of the traders who attended our weekly free forex trading class. I said I can figure out a trade opportunity on the weekly chart. And I'm gonna show you all the weekly chart right now. I'm gonna zoom out, and there, zooming out right now, you can see we have a potential of a symmetric triangle, and here is a swing high right here, the next swing low high, we have a swing downward right here, we have a touch right here, and there right there. So what we have right here is a symmetric triangle, just like we did have on the Euro USD, which I discussed earlier. And I'm gonna zoom in. Let's zoom in. Zooming in right on this currency pairs, you can see price is currently struggling to break this key level structure right here. Take note of our dynamic support trend line. Support trend line right here. Price actually broke this dynamic support trend line last week, and then at this key level of 116.055 we have price rejection. That means this key level structure is still active, dated back to this zone right there. That was July of 2016, and then there's July of 2019, and again in this year this key level is still acting as level for the bears to penetrate. So it's still very strong key level for us to watch out for. The fact we have a weekly rejection upward out of this key level structure is still means the bears are still struggling to break this level. So what are we looking out for next week? For the fact we already have the pairs have broken this dynamic support trend line, what we are looking out for right now is to see if we can see the price action, if this key level structure can be broken next week, whereby we have a weekly close below this key level structure right there. Then it's an indication the pairs are definitely coming in to make a rotation of price to the next key level, which acts as 112.759. And then if the boost comes in aggressively and then enjoy a weekly close of candle above this broken dynamic support trend line, then it's a signal of a false breakout, like we did have right here. This zone right here, you can see our price initially made a rally backward and then retest this our dynamic resistance right here. So this actually happened, and I stated in the last week, I said if this happens, it means this can actually figure out to be a double bottom, just like something like this, and whereby this is the neckline right here. This is the neckline. The neckline actually we hacked at 122.409, and then price have to break this dynamic resistance trend line before we can have price to retest this zone. And then if the bulls successfully break this region right there, then it means the bulls are definitely moving in with much momentum to retest the next key level, which acts at 127.388. So if the base comes in next week, enjoy a weekly close right there, then it's a strong indication for the bears. They are willing to retest the next key level, which acts as 112.759. I'm still watching this currency pairs to see what the bears and the bulls have to get done right here. So the next currency on our watch list is the British pound sterling against the Australian dollar. We can see clearly right here a nice well-defined price action of a bullish rising channel. We have our swings high, swings low right here, dated back from that was July of 2019 to the present moment. We had no price breaking out, that was last week. We have the first breakout, that was on Wednesday. Price made a pullback, this key level structure, rejected price, which acts as 1.94123 rejected price. That was the first breakout on Wednesday, and then we had another rejection right here on Thursday, and then another on Friday. So I'm gonna zoom in on this currency pair so we can see properly. Okay, here is the first breakout, the rejection, and then another rejection. So a lot of traders have been asking me, Helen, what is your decision on the currency pairs right here? We can see price broke out right here. We had a rejection right here. Well, according to my analysis right here, what I can figure right here is I can have a my volume right here. That is, I can figure out a well decisive breakout. Remember, whenever you want to check a breakout, you must see a very decisive breakout. And then I'm going to show you something on the weekly chart right here. On the weekly chart right here, this key level right here, is it right here? This is a my volume. So this is not a decisive breakout to my kind of trading strategy. I always want to see a decisive breakout, just like if I can figure out something like this. Actually, I can figure out a breakout like this, and then I have a retest. This is the kind of my trading strategy I love, trading decisions I love to take. So and then on the 4-hour chart, if you view properly, I'm gonna zoom in. This is a 4-hour chart of the currency pairs of the British against the Australian dollar. I can figure out another bearish channel. You can see right here, bearish channel. So let's zoom in. There's it right here. You can see this bearish channel, even though we have price closing last week below our dynamic support trend line, and then our key level support right here. So my trading idea right here is I still want to see a pullback of price, a retest of price at this zone right here, because I don't want to short yet at this zone right here. For the fact I can see a my volume right there, I can't see a decisive breakout right there. It's just a my breakout right there. So I'm kind of skeptical of taking this kind of trade. So I want to see a well-defined breakout on this currency or pairs right there. So and then remember, if you want to take this trade right there, remember of the spread on the British or against the Australian dollar. It all depends on your brokerage firm, but I know these currency pairs have a high spread, so you should reduce your size position. The size, for example, if you normally execute one lot, then you shouldn't execute that one lot. You can divide it into 5 places at least, because of the spread right there. So this is right there. So for my kind of like me, I'm not getting into this trade right now. I still want to see a retest right there before I'm gonna willing to join the bearish trend right there. Any decision right there I'm gonna take, any trading strategy I'm gonna implement right there, when it's the right time for me to take this trade right there, I'm gonna share this with the VIP members. So if you haven't joined the VIP members, there's a link at the bottom of this video. You can click on that link so you can get access to become the VIP member. So nice what I can figure out on the British against the Australian dollar. I'm still waiting on these currency pairs to see a well-defined breakout and a well-defined retest of price, so I can confirm this is a new dynamic resistance level. And then if also depends on the Monday opening of candle, if we can have a daily close of candle next week closing below this key level, then it means this is definitely a defined it is a possibility of a defined breakout. And then if the bulls successfully have a daily close above this region right there, then it's an indication, it's a signal, high possibility that this is actually a false breakout right there. So I'm still looking out for this currency pairs next week. I want to pay close attention to see what the bulls and the pairs have to get done right here. Now it's time we wrap up things with the gold. Here on the gold, I am on the weekly chart, and we can see last week I discussed about the gold when I figure out a bearish pin bar right here. This is a bearish pin bar which was being rejected at a key level. That was the last swing high of the gold. That was a 1692.33. There's a key level right here. We had a rejection. I'm gonna zoom in. This was the rejection of this candle right here, a bearish pin bar, and I stated this was a bearish influence right here. Last week, this was last pent week, we had a boost coming in aggressively. Actually, there was a pull of price downward right here by the bears, and then the boost comes in, steps in aggressively, and then pull price, and we're thereby ensuring a weekly close above this our key level structure right here. And then here on the daily chart, this is the daily chart. You can see right here, you can see these are inside bar for this upward rally right here. You can see this swing right up right here. And then if you watch properly this chart, you can see where I highlighted with my gray rectangular box right here, which I'm using this to indicate the chart pattern. If you are familiar with technical analysis, this potential inverse head and shoulder, this is right here, which is actually supporting this upward movement of rally of the gold. And then here lies the last swing. So if the bulls can successfully enjoy a breakout of this upswings, that is these high swings of this inside bar next week, then I wouldn't be surprised if the price of gold skyrockets, and then where will be the next target. Take note, the next key level, which was dated back, that is from 2012. Is it no? And then right here, that was the 2012. This is a key level of 1794.96. This is the next key level, and then the bulls have to retest this zone. So this zone right now is a zone which I've been retesting price right from 2012, and if the bulls successfully break above this level, then it means price eventually turn into a safe haven, or during this pandemic issues going on around the world. That means investors have confidence to put their resources, save their resources, in their gold. That means the next target for the gold price level is the next, that is a 1921.88. I'm gonna zoom in. Let's zoom in. There's a level right here. You can see this. That was 2012, and then right here we have 2011. So definitely there is gonna be a double top zone right here, and then if the price of gold eventually breaks this level right there, then I wouldn't be surprised if the price of gold eventually skyrockets to the next price, which will be 2000. That will be the first of its kind in historical record. Actually, this was the highest swings of price of gold right from its historical record, and that is a price of 1921.88, and then that was in September, that is 2011. So, and here is it. If I construct right here from this level right here up right here, you can see there's a very strong indication of a bullish aggressive rally for the gold. You can see there's a long-term bullish trend, and then let's view on the weekly chart. Alternatively, the business of trading is about probability. If the bears comes in next week and then ensured price rotation close back into this region right here, thereby ensuring a weekly close of price below the key level of 1692.33, then it means this bearish candle formation right here is still active. It's not yet invalidated. Is if price doesn't go above this bearish pin bar. If next week price can go above this bearish pin bar right there, then it means this bearish pin bar has been invalidated. So right now I am not interested to short the gold, even though I short a little position last week. I just want to watch out what is actually going on, because right now there's a lot of volatility in the market, and any trade you want to take, you have to be very, very, very careful. Take a trade that you have enough confidence factors to back up your analysis. So that's my trading decision on the gold. For those who are asking, am I going to long gold, am I going to short gold? For now, I am not logging shorting the gold, because right now the market is highly volatile. Okay guys, that is all I have for you in this weekly forex forecast, and thanks for watching this video from the beginning to the end. I really appreciate your time, and do not forget to subscribe, like this video, share this video, and then put a comment down so I can know how you feel about this content. So if you are interested to become a VIP member of FS Class Forex Education, or there's a link below this video. You can click on that link, and then you're going to be redirected to the page where you can go through the process to become a VIP member. So what are the benefits of becoming a VIP member? Every day I'm gonna show you my trading decisions on the currency pairs I watch out for. I'm gonna give you my entry level, my stop loss, my take profit. I'm gonna send a signal to you. If you are a busy trader, maybe you have a work that takes much of your time, but you are willing to become a trader in the forex market, then this is really gonna be helpful for you. I'm gonna guide you, educate you through the process. You're gonna become a successful trader you have always wanted to be. So you have a wonderful weekend. Peace.